Hello, everybody, and welcome to the Plus Three Futures and Commodities show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. We are recording here on Saturday, May 17th at about 12 noon Eastern. A couple weeks ago, as we rolled into the month of May, we asked the question, sell in May and go away, or buy in May and stay to play. Well, if you stayed to play in May, you did pretty well. And the question for today that we're going to try and provide evidence and answers to is, are we getting time to where, it's time to pack up the toys and head home? Evidence is beginning to mount, and we want to share that with you as well as the levels. What
Mhm.
do you say, Barry? Where are we in this whole mess these days?
Well, I think we should at least be collecting some of the toys.
Yeah. Yeah,
You know.
start putting them back into their boxes, right?
Into the box. Yeah, I feel like that's where we're at. Anyway, we're going to look at all of them, all the levels and what timing's coming up. And I think it'll be good. It'll be good refresher.
It's good to take a look at all the things because you and I always prep for the show and talk beforehand, and it's
Mhm.
amazing the confluence that begins to happen around these windows that we have, because we do have a major window this coming week with geometric time counts, with the Rebel Yell cycle,
Mhm.
and Friday's announcement after the close of a downgrade for the US credit rating is kind of like the first shot you get in these windows. This is the
Mhm.
sort of
Mhm.
thing that happens as these windows open and close. So I love these circle charts. I'm glad you're starting with this one. Let's dive right in and talk about what it means and what's the significance here.
Right. So the circle I kept on, no matter what we were doing, it's been here for a while, a couple of months at least. Circle is not the key feature here is let's take it from last week where we left it off. Week before that, we were talking about this zone and the 5605, and if we can hold above it, we're probably going to go up and test higher, and which we did. And then last week we talked about the 5795. If we can settle above, then we're probably going to test the 50% of the square, which is sort of the norm. So it did all of that. We started holding all the levels very well, starting with the 50% here. We held down here, and then we held pretty much, every pullback, starting from the first pullback, held the levels fairly well, even here. And then 5605. And finally, Friday last week, 5874, which was the 50% level. And you can see how Monday we went up and tapped it. Then, a little bit of grinding and moaning and groaning, and then got on top of it. And now we basically went to this 5990 level, which was like, so the next level of resistance we had on the books. It just so happens the circle happens to intersect that probably by Monday. And these inflection points are important to watch. I mean, that alone obviously is not enough, but it's nice if things get lined up in that way. So that's the first thing. That's where we've been and how we've been following the market. We've been looking at every pullback and we've been basically long the entire time since this first 50% pullback came in, right? That's kind of how we move from level to level. Now there are some important timing points coming in. I'll show you that when we get to the cash chart. But I wanted, this 5990 was a key level that was marked off on the chart. I can't remember if it was there last week, but it is. Um,
And you got a 45 time count there too on calendar days right there.
yeah, there's a time count coming up. I thought it might be easier to look at them all on the calendar day chart, so
Sure,
I'll talk about
sure.
them. But yeah, there's a 45 count and there's a 90 coming up here, and we'll talk about what that means. So I just want to quickly jump to the cash weekly chart just to sketch out memory. So earlier, I mean, this was in here months, in 2024, we were looking for some kind of a finish to the leg along the ABCD or this intersection where the price and time meets. We went a little bit further out, which is fine. but it didn't take out the target. And we finally had the zone up here. It was like the final push, the final walls, let's say, of resistance. Couldn't really do that either. Then, we reversed off of that. Came down into 50.76, held it on the rebound, on the first pullback. And then, basically straight up since then. And this is the weekly, right? So weekly, I had resistance at 59.50, and we basically pushed up into that on Friday. And the level after that would be right around, let's say 60.48 would be where the 240 degrees come in. Let me put that in so you guys have it. And well, the key thing here is we pushed up right against this 59.50. Like always, the whole point for next week is, to see if we can hold above it or not, right? We can push into it, that's fine. Sometimes we go probing and really not follow through. The point here is we pushed up against resistance. The basis the weekly. And basis the daily, we pushed up into 59.90. But we're above 58.74. So we'll talk about that in a little bit. Well, we'll talk about that now. I think long as we're above 58.74, market's in pretty good shape. We can't really say anything negative. But with timing coming, we really have to be watching this carefully. So let me jump to that chart. All right, now we're jumping back to the, we looked at the cash weekly, and this is the cash daily calendar chart. Here, I'm pretty sure it was last week, we added the quarter square level, the 3 quarters at 59.65. And that seemed like the next natural level of resistance, especially since we, ran an entire quarter last week. If you look at, the low on Monday was exactly on the 50% of the square. So there's the gap. And here's consolidation between these two levels, 56.97 and 55.82, right? We had that, and we gap right on top of it. So anytime, we gap, usually if there's strong resistance, a gap would what usually takes to get through it. And, or you'd have to sit there and grind through it for days. So here we gapped it and the low held, and then from there, we just came right up into the 3/4 square. Now, the timing we were talking about is we have, so here, high to high 90 calendar days would be around May 20th. Not too far away. And the other thing is, if you guys notice from the low here, we're like 2 bars away. So that's 45. So we have a 90 high to high, you can see that here. And then from the low, we're running about 45 on the 22nd. So 20th, 21st, 22nd is sort of the window for this to happen. And Ben Rebel Yell is on Monday, right? Or is it Sunday night?
Sunday, the
Monday?
18th. The 18th, Sunday.
Yeah.
So we got 18th, 22nd, 20th. I mean, it's all right in there.
Yeah, the problem is, when we have a kind of a wide spread, it's really trying to nail down exactly, which day is going to be the sort of the active day, right? The target date. So we'll look at that. But I think, the reason we started talking about packing up the toys is, one time count. 45 is a very important time count, by the way. It's the time count. And 90 is too, right? So 90, then you have half of that is 45. So we're coming up with that. And high to highs and low to lows are also important time counts, and you'll find them all over the place. And interestingly, here we have 2, right? We have both of them together kind of in harmony, because we have a 45 and a 90 coming together within the same time frame. We have a Rebel Yell cycle pretty much coming into play on Monday. So that's the setup, right? That's what made us think about, well, is it time to sort of pack it up? Because it's been a good run. May, if you sold and went away, boy, you're coming back to a nightmare. So if you weren't watching your positions, right? So
right.
starting in May, we basically took the opposite course. It's kind of what we were thinking. That was the basis for the whole joke about, selling May or not, right? Or stay to play. And so anyway, that's a setup in timing wise between the 19th, 22nd is the window. And price wise, well, we already hit it. That's the thing. If you look at the charts we started out with. And I just wanted to show you the square 72 here, which I think is active. So 59.90 ends up being where the square 144 hits. Not the square 72, but 144 degrees up. All right, so we're very close to that. So we're basically up 144 degrees. If we sneak up a little bit on Sunday or Monday, Tuesday, push into that, okay, fine. So that's sort of a buffer, right? We have the highs we looked at, 59.50 that we looked at the weekly chart. And then we have this 59.65, we have 59.90. This is sort of the buffer zone for pricing. Now the question is, well, exactly where is it going to stop? Well, we don't have to know that. We can just watch for price action to show us the rest of it, right? It could be some kind of reversal or whatever price action that we see. And this is what you want to, we talk about 30-minute chart. So we watch that pretty closely. We post 30-minute updates every day. So actually, maybe a good segue to talk about the 30-minute chart. So last week, you can see, we cleared a couple of really important points, levels, and we got above the 58. We cleared 56.58. We were hanging above it, coming towards the end. You can see the 8th and the 9th, which makes it positive. And the next place would be the 50% square. And we got on top of that, ran right up into the next one. And you can see right here, 58.37 was held, ran right up into the 50%, 59.27, came back for a retest at 58.64, which has been on the board. And then finally, we got above 59.27. And you can see there, it's kind of a good stair-stepping week, it makes it easy when the market does sort of behave theoretically well, or stick to the theoretics, right? It's nice. So it held above 29.27, and we bounced around there. You can see that bounced around there for a little bit, and we pushed higher Friday till the news came out about the downgrade, but it still held the, so far we held the level, and we also held the lower trend line. So it's okay, but we're definitely pushing right into that zone we want to watch. Anyway, we got here talking about, we have all these windows coming up. What do we do here? So if you guys follow, if you want to, the podcast is week to week. So if you want to follow us daily, then I think maybe you can get a better idea of how to sort of focus in on the day, because it'll show up on the 30-minute. And here, and if you don't, that's fine too. Here are the levels. You can use these. Ideally, we want to stay above 59.27. And even on a flush, we want to stay above 59.09. That's the critical level, right? If we break that and somehow counter trends can't really hold, then I'm expecting some kind of weakness. So if that happens 20th, 21st, we really want to watch that. You might not want to be really going hard on the long side. You have to be very careful. Why? Because of the timing cycles we talked about. And we've already sort of pushed against the pricing that we wanted to see on a higher time frame. So 59.27, 59.09, I think it's a critical level. We can run up and hit 6,000. We got 59.99 here on the board. And 60.18, 60.17. That's to the upside. And we'll see what we do there. But so the idea there is, as long as we're above 59.27, market's in a pretty good position. And resistance up in the 60.18 level. But the theory is the same, right? If we take out 60.18, okay, great. Settle above that, then we push higher. And that's just how the markets move. But because the reversal to the downside, I think the earliest warning is really, taking out this 59.27 would be the first sort of confirmation of a reversal, or 59.09 to be a little bit more conservative. It's still very early in the process because you're trying to catch it within 70 points or so. If it just comes straight down, right? That's kind of you have anything to add to that, Ben?
Coverage. We know we're in an important time window, and now we
Mhm.
know the key levels to watch because the price action tells us the effects of the cycle. So we really got to get a good read on what price action starts doing, Sunday night, Monday morning.
Exactly. That's how it is. Yeah. Yeah, I think that's simple enough for the 30-minute, and that's enough for next week. This is the well, this is where I post this is the where I post the 30-minute updates. If you guys want to look, they look something like this. I have a little sample of the chart and some comments in the morning. It's usually right around the opening. So we talked about, what we're looking for, where the resistance is, support levels, and sort of a directional, sort of the bias that we might have for today. And we also talk about these fuse lines and watching the fuse lines for early, clues to trend direction. And this is what the fuse lines look like. It's just a level. Here it's 59.53. And it's kind of like a bull bear line. So if you follow that every day, you'll see the value of that because you'll see the directional changes very early in relation to where these lines are. And if you go to the pinned note message, you can see we talk about different patterns that form around fuse lines. And if you they're patterns you guys already know, but it's really how they behave around fuse lines. And if you know that, and you know your basic market structure, I think it'll be a big help. Take a look at that. All right, let's move on. So cash, just in closing, we have timing in the 45.90s. We have pricing in the 144, which looks pretty good. So we ought to watch both of them. Okay, going into next week. All right, let's move on to bonds. And you guys know we've been bearish on bonds this entire time, and here bonds failed again. Yeah, 116.5 level. It's 45 down from the high. And we've been talking about how this, we should at least come down and flush the low we had in January. And so far, we're heading in the right direction. We haven't quite gotten there and really trying to hold this low. We'll see. It looks like we're going to go for some
At
kind
least
of
one other person that's bearish, and that's Moody's.
well, there you go. Yeah,
So
right.
their announcement might help you get those lows tested.
It's a good point. Anyway, so let's see. Not much to do here. We're between levels. The 50% of the square here is 110.24. And you can take a look at that. The 45 degrees, 16.5. So that's the bracket. Even if you drop a trend line from the two main highs or the tighter one, either way, it just looks like it's headed lower. I don't even want to put a ABCD down because that would probably just look really scary. But we'll see. We'll see how much longer it'll consolidate here before moving. Well, I guess I did put the ABCD on the weekly. All right, so the weekly, pretty much the same story. 114 is really the important level, and you can see this week we got under it and sort of stayed under it. And the interesting thing is last week, the lows were pretty much on the same number. This week, the highs were on the same number. We flipped over. We're on the downside. So basis the weekly, we really want to watch the 114 and see how we do. And if we start slipping, the low that I was talking about on the daily is right here. Just a pivot. But there's much deeper low over here, whereas the weekly ABCD could end up. Anyway, you can see, 3 weeks we've been down, and 3 weeks we've been bearish. Let's see how it plays out. Looks a little slow at the moment, but it might be because of the square 9 levels. We have 135 degrees down from the low. So that might be why. So if we take out this line, 111.10, things might get rolling. And that'll, the next levels really gets down to 107, 106, 107 level. That's pretty much where the old low is. But that's how you can kind of target these.
Bonds.
Let's move on to crude. So far, it's behaving okay. It's acting a little weak. We have the lows and not quite pushing this key level. I mean, this is no pushover level, this 64.75, 65 level. It's really important, and you guys can see it, and I think everybody else can see it. There's a structural resistance up here. That's a floor we've been on for a long time. And so once we take that out, obviously all eyes are going to be on crude. But you guys can know early on that, we were looking for some kind of a flush here. We got it. And this could be one of these levels where, you might have to gap to get through it. Either we do it next week or much later, however it happens, right? These are key levels that everybody talked about the S&P gapping through important levels, but a lot of markets do that. Yeah. Let's see what happens here in this case. But basically not much to do. Really, we need to get above this 64.75, this line to really start wheeling. So for now, we'll watch it. And if it goes lower, fine. I think, we need to sort of clean up the bottom before we get moving. So, and I'm glad that we're here because that had to happen, right? So we're waiting for the next stage to unfold. So the weekly crude, you can see how it looks a little bit. Look how top heavy it looks, right? Not top heavy, all the overhead that's above. We're gonna have to somehow get through that. We have multiple trend lines coming through.
That 60 is key, isn't it? That 60 degrees up.
Yeah. It's going to be really important. And it's interesting how we have that from I think this high on the daily, or this high on the daily, and this is from the low, right? So they all line up. So it's a really important level. And what we do here, this is the point to watch. So you guys know, and we'll watch it and let it clear out. We don't want to get in there too early and not have anything happen. We'll wait. We'll wait it out. Gold acting, behaving normally. We were looking for some kind of a correction after this 34.30 level got hit, 450 degrees up.
Hey, Barry, draw in that ABCD and you'll see it's a nice completion there. And we have to see. Next week will tell us a lot.
Yeah, went right to it. On time, too. Time and price. So that's really good. Okay, so then we really, all that means is we really have to watch the Friday low or Thursday low. If we take these out by much, then, we're going to probably go up and test the 360-degree level, which is right around, I have 3070 here, 3065, 3070, which would make sense because we have a little bit of a gap in the price action going there. So if we take these lows out, that means, the ABCD also got taken out. And we know when that happens, there's usually some kind of extended move. And that could end up testing the 360-degree level. 3065, 3070 is the level to watch. And I think, we talked about how any kind of correction, even down to 2710, it's not bad for gold at this point. It just adds to the I don't know, what would you call it? Stability, robustness for a future. Instead of going straight up without any kind of pullback, right?
Exactly. Yep. A much healthier uptrend.
So it looks good. Let's see how it goes. Take a quick look at the weekly. Here's a weekly with the weekly squares. And we did square out. We talked about it when it happened. As we were coming up into it. We went right up into the high. So 35, 36, and we were looking for some kind of a correction, and we were getting it. So 3066 seems like the level to watch now. Let me make sure that number is correct. Type thing. Should be 3088. I think 66 from another square. So long as we're above 3088, I think the weekly's in a hell of a strong position, strong spot. And we've had a, pretty virtually vertical looking move since 23, since 22. And that ought to correct a little bit. So I think some consolidation or correction down into here wouldn't be bad just to balance the chart out. So nothing surprising. We're still bullish. I just think you have to let the market breathe a little bit here. Silver is definitely breathing a lot, not running so much, but it's all right. It's doing it all above this 31.56 level.
Yeah.
It's consolidating. Yeah, it's holding. Looks okay. Looks healthy. 270 is really the challenge here. So once we get above that, I think silver will be in much better shape. So that would be 34.37. It's actual square. And I think there's another square at some level, maybe square 9 at 33.63, which is where we kind of stalled out on this leg. Anyway, as long as we're above this, I think consolidation is good and healthy. Even coming down to the lower end of that consolidation still keeps it as a consolidation. So I think we're okay. There's a wider one. There's a bigger consolidation happening. And then there's a smaller one in the upper square, upper quarter, so upper half of this 90. Those are the things we're watching. Let's move on to the copper chart. And, holding up. What's that?
Kind of looks like silver, doesn't it?
Yeah, looks like silver. And it's holding about this 447 level, which is a 50% of the square. Looks good. I think technically this is a nice looking chart. It's not in some kind of a big bull move, but it's kind of poised for one, as long as we're above 50% of the square. If we take this out at some point, then we know we got some kind of problems. And obviously we're going to go lower. And if we start cracking here lower, we're going to take out this low. So, if copper goes, I think it's really going to go now. But if it holds, we can consolidate here longer and then move higher. That would be fine. But this is a critical level to watch. Yeah, 447. Okay, that's anything you want to add to that, Ben? Copper?
It's sort of a bullish consolidation, as you were saying. It's just kind of winding up for now.
Yeah, let it do its thing. So copper weekly, just to take a quick look, is holding above the main square, 144 degrees up from the low back in 2020, and we hit the 260-degree level. That's where we talked about that being high and looking for some kind of a consolidation or some kind of a correction. And we got one in spades. Looks like we're probably going to hold about the 144, which is at 423. So we got 423, we got 447 on the other side. So now you guys can kind of see where the buffer zone is between both charts. So that's the zone we want to mark out. And so we're looking for it to consolidate here. That's all. Nothing much to do at the moment. Let's move on to some exciting things. We talked about markets stair-stepping earlier. And so this is a good example of that. This low came in, we talk about 90s. So here's a 90-degree move. And actually it was 90 by 90, right? And we squared out. And now dollar starting to move up, right? And we called it at the low. We talked about the dollar last couple times. And here we're starting to make higher lows and starting to move. Looking good. Obviously, not a lot of heat till we get above this 102.5 level or 102.60. Once we get above that, I think we'll pick up some momentum. But for now, I'm expecting it to probably test that, pull back a little back and fill a little and then maybe start moving above it. So, and that's an important level because you can see what happened in price action before we broke down. So I think the dollar is doing great technically. So it's a great time to trade currency. So there's no problem there.
And this one's really instructive too, Barry, because the sentiment could not have been worse for the dollar at the low.
Oh, I know, right? I remember.
So
Yeah.
negative,
Yeah.
so negative at the low.
Yeah. And that helped.
Yeah, it helps set the low.
Yeah. Isn't it funny how a lot of the sentiment peaks and valleys come exactly when time and price is squaring out?
It's
brilliant.
It
never ceases to amaze me how that happens. So let's see, the dollar, yeah. Let's see how it seems like it's going to have to grind through this because we got above the, if you look at this red line and the blue line and you go back, you can see that's kind of where the overhead is, right? And you can see how we consolidated below the red line, which is at 100.5
Mm-hmm.
and 99.50. And now we're above it. We got it popped above, came back, retested, and we're holding above it. So if we can grind through here, any pullback that's holding above this 150 level, we're in good shape. Dollars basing it out. Like this is all hammered out well.
Sure.
Yeah, I think it looks good. Big dollar fans over here. So, well, the other reason we were talking about the low was, weekly hit is 98.25, key support level, looking pretty good. And the high, we talked about the high last week because we hit the 50% of the square. So that's it. Now we have to, let it consolidate, breathe a little bit, and move higher. So I think most of the work's in place. Now we just trade it, right, in that direction. Just giving it enough room to breathe. Well, here's our euro call, right? We called the high here as it was coming in along with the dollar because we had a 90 over here too. Well, 90 in time, 135 in price. And we had a Gartley. So everything lined up right around the high and sure, we had a nice sell-off right to 93 level. And we stopped, halted. But, you guys, I mean, obviously you're watching because you understand the power of the Gann analysis and the squares. But you can see, how it came right to the 90 and stopped, right? And then the counter trend. So the levels work and they're very useful. We have a quarter of the square right here at 1280. So I think long as we're below that, it's definitely in weak hands. This is weaker condition. Obviously, if we take out the 90 and trade lower, below, let's say 1060, 1061, yeah. So it's going to get weaker still. But currencies don't necessarily go straight without some kind of a counter trend. So watch the behavior around here, and once we crack it, then we know, it's much weaker, and that would be probably when the dollar's going to take off. So watch the two together. So here's the weekly euro, basically the same thing. We went up to the ABCD, which was the Gartley that we just talked about. We couldn't hold above the 90 basis the weekly, so we broke below. So it's really 1095 is the level we need to get below on the basis of weekly. Basically, we're okay now. We're just watching to see what the counterfeits look like, what the market's weak.
So that's all I have for the euro. Talk about the Hang Seng really quick. And the Hang Seng, we've been bullish on this ever since we came down into the turf lows, and it held exactly on the square. And then we gapped. Here's another example of a key resistant level, and how we gapped through it, for the next round, gapped, and you can see the consolidation was, way above the line, which means, right, it's more bullish than bearish, and kept grinding higher. Now we're at the, we're kind of where we all started. So we're at the 144 level, and the level there is 23,880 is the level. So we'll watch to see what happens. Like, I think we talked about it last week, as long as we stay above this 22,709, let's say 22,710 level, market's in pretty good shape, and it can consolidate here. But, once we get above here, get above the 24,000 level, 2486, it can certainly go higher, at least go up and test the 144. But even looking at this, you can see the kind of move we had. It's probably ready for some kind of a correction or consolidation. So it's happened every time prior. We can run about a square on the average before we consolidate in some way. We're getting there. It's there also. And natural gas, are you covering natural gas this week?
No, because I think we're heading lower. I think we're going to test the lows.
Okay. Yeah, these lows look pretty good. I mean, 298.3 seems like, we have a lot of good structural support. And I'd say, didn't you mention you saw an outside reversal on the
The weekly, yeah, there's
weekly.
a weekly outside reversal. So, yeah, I think we're probably going to see some follow through and weakness there on natural
Hmm.
gas next couple of weeks.
Yeah. So along with that, then a little flush below 298 wouldn't be out of order then, just to
Right?
go white clean these up, and we'll take it from there. See how it goes. Well, that's all I got. Let me put it back to you. And if you guys like our work, please remember to subscribe and like and comment and hit the alert. So
Yeah, ring the bell. Ring the bell.
ring the bells. All right, let me put it back to you. All right, Ben, we talked about this 21,366 level last week. If we
Yes, we
cleared the
did.
if we cleared the 50%, we were going to go head it there, and here we are.
Yeah, here we
Oh,
are. And we're
wrong week.
here, and you can see the intersection here. We got price and time.
Yeah, yeah. No joke.
And and there's a reason that, we're stalling here. Right? What is it? Basically 3, 4 days we've been right around this number.
Mm-hmm.
The close was 21,400 and the line's 21,366. We're right there.
Right.
So
And we
this
ran
is
up
the,
and we ran up into the customary, sort of the 1/8 ran into the other side. So we're right there.
we're right there. And if we cannot clear this and get above, then the downturn comes. The other thing that, in addition to the rebel yell and the time counts Barry was showing you on the S&P and the ES, I mean, we got 36 calendar days low to high. You
Mm-hmm.
got 60 high to high here. You got 144 high to high here. And there's a lot of stuff coming in.
Yeah.
So we got to watch. We got to watch Sunday, Monday, see how we handle this 21,000 area.
And then
If
Tuesday, Wednesday.
and then Tuesday, Wednesday. And again, if we get stuck under here, we're heading back down here to 20, the half square,
Hmm.
20,600 area. If we can clear it, we're going to go up to 22,000.
Hmm.
We're also smack in the middle of this overhead too. So there's a lot of resistance in here. So let's see how it plays out.
Right.
And we'll see pretty quickly next week. Let's go to the NQ weekly. There it is. Here it's 21,000.
Hmm.
Same area, same issue. Right, we this past week we had a nice bar that pushed up through it, but you could see the bar straddling it, so it doesn't give us clarity on which direction we're going to go. The coming week we're going to have to see, can we get, either a full bar above or a full bar below, and that'll give us clues.
Hmm.
Again, if we do turn down from here and take out last week's lows and get a weekly reversal, it'll be fairly ominous because it's another lower high, off this all-time high here in December. So we got to watch that carefully. Let's look at the monthly. Monthly, same story. You can see why this area is so important. On the daily, we had what, 20,000, 21,400, call it. Weekly, we had 21,000 as well. 21,100. And now here on the monthly, we've got 21,100. So it's critical. We really want to see how price is going to resolve here. Above, we keep going, it's bullish. Below, we've got problems and the correction's restarting.
Right.
Let's take a quick look at the calendar day one too, just to show you how that's been
Hmm.
performing. Here it's 20,600 is the half square, 22,000 is the full. So we're kind of in between here. So
Right.
in this 22 to 20,000 range, we're really gonna fight this battle and figure out, is this a blow off rally, in like a bear market squeeze in tech, or is real money coming back in and they're going to push this thing up further?
Hmm.
Anything you want to add here on the NQs?
No, looks like we're on track. We know the timing and we know the levels. That's Now we have to wait for a price.
That's it.
Hmm.
That is it. We know the win time window. We know the price levels. Now we got to see what's price action going to do Sunday, Monday, and the rest of next week. All right, let's jump over to Bitcoin. Bitcoin's holding up real well. What it's doing is sort of consolidating. You can see this triangle forming
Mm-hmm.
here right above the half square, above this 102,000 level. And if we break up and clear this, 108 is next. Obviously, if we break down out of the triangle and get stuck under the half square, then we're heading back to 96,000. But
Yep.
it's it really nicely stair steps. It's doing the same thing it did. It got to a level,
Mm-hmm.
triangle, broke out. This wasn't a triangle, but
A little consolidation. Yep.
consolidation at the level, next level, triangle. Now we're going to see
Mm-hmm.
where the next move goes. So it's acting well. Bigger time frames, it looks good too. The push continues once we cleared 89.5. The push towards 108 continues.
Mm-hmm.
Are we ultimately going to do like a three drive, Barry? It's not a perfect symmetry, but one, two, and if we make a higher high, get the third drive here.
We could do that, and we could also, yeah, because look at the move. I was just noticing what happened in 21. We made a high early 21, drop down, and then A B C D kind of a move into false break, and then
Hmm.
reverse, right?
Hmm.
So let's see
Yeah,
how
they're
it plays out.
similar pattern, right?
Similar, yeah.
Yep,
So, but anyway, we got the level, so we'll watch it. 108 sounds like the level to watch now.
sure. Yep, on the upside.
Mm-hmm.
The monthly looks really good,
Mm-hmm. Yeah, look at
structurally.
that. Yeah.
It's really, really good structure. I mean, look, we came down and tested these previous highs here.
Mm-hmm.
We're going up, and now we're sitting on top of the half square here. So here we're looking at 111,000. So in that 108 to 112,000 range is a decent target for this thing next. But it's acting well. Bitcoin
Yeah.
overall is acting very, very well.
Yeah.
Anything else to add here on Bitcoin?
No, we're good. We're good. Looks good.
Okay, so let's talk about the commodities. We've been highlighting corn and soybeans and the grains. They've kind of joined wheat in that wheat's going sideways, but corn and soybeans are kind of pulling back, and we're watching here to see if we're going to get higher lows. If we get higher lows, it's going to set us up for that potential move higher we were talking about. So we'll highlight those if we get a higher low and a reversal on a daily basis there. Cotton is back to going sideways. It tried to break out a couple times, and now we're back into the channel. So we're going to leave that one alone for now. Crude, Barrie covered. Natural gas we spoke about. That weekly outside reversal has me thinking we're going to go down and test those lows. And as you said, Barrie, probably do a false break, knowing that commodity and how it likes to,
Mm-hmm.
push people around to the wrong side. Crude still weak. We got that as Barry reviewed. We have that one really important level, like around 64, 65. We got to clear. We clear that. And you may be right. It may be an event gap up type thing that has to do that. It has to get over all that overhead. So
Yeah.
we'll see how that goes. But the ones
Mm-hmm.
I want to talk about uh, are a couple softs, cocoa and coffee. Let's start with cocoa first. Cocoa, we talked about when these highs came in, how we squared out and we expected a correction. Well, we got the correction and we pulled back into support. And what we've done, we had a false break here at the low. You can see, we barely made a lower low here.
Mm-hmm. And a quick reversal.
Quick reversal, and now we're starting to trend. I think we're getting to the meat of sort of the aggressive move that we like, third wave, some people call it, uh, push higher. And I think this is going to ultimately give us new all-time highs. And it would complete just like we were talking about in the other market we were looking at. This could give us the Bitcoin. This could give us three drives, right? One, two, and then a higher high would be a third drive. So here I think we're looking at 13 to 14,000 on cocoa. Obviously, the next important level is the 11,400 level. Expect some resistance there, but we get up there, we clear that, and then we're going to move. Then it's all-time highs. We cleared this 10,000 level on Friday because we straddled it on Thursday. So watch this. We had a nice little, you can call it, you know how in a fast moving market, Barry, we only get sort of inside bar type move.
Mm-hmm.
Here's an example of that, right? We went up inside bar on Wednesday, take out the low, and then scream up to a higher high on Thursday, and then Friday we just made a higher high. So this is a market that looks like it's going to move. I'm thinking all-time highs coming fairly soon.
Mm-hmm.
Let's take a look at the weekly, give you a weekly view. And we had a sharp pullback after it made a high, but look at that. Again, it's another higher low, right? Here you had three drives to a low, then we made that all-time high, and then it reversed. But now I was looking at this sort of sideways consolidation we did once we made that low, and when we broke out of it on Thursday last week, man, we really took off.
Yeah.
So here you can see the target if we do clear the all-time highs, the previous all-time highs is again right around 14,000. And it would give us a nice three drives. You can see it well here. One, two, and this would be the third. And as you can see, this thing doesn't sit around. When it goes, it goes.
It gets
The high,
moving, yeah.
the high might be this week. I mean, who the hell knows? It might be, in the next week or so.
Mm-hmm.
So, but it looks poised to move. Let's give you a monthly view. It's a little more compressed on the monthly because these things really move. But we got that outside reverse. Now it wasn't quite an outside reversal. Remember I was talking about that. It was the close wasn't over the previous high, but it was an
Mm-hmm.
outside bar. And then this month we really got the move. So targets again, there's your 14,000. So in that upper 13s, 14,000 range, I think is a decent target. We closed at around 10,900. So there's some juice left in this one. Any other comments you want to make or anything you see that you want to
No, we're good. I think
talk about in cocoa?
I know. I think it's very clear how the squares work again. And you can see how 85, that 90 level, how it held. The triangle
Hmm.
broke to the upside and zip, zip.
And there we go.
Yeah, very
And
nice.
look where once it broke out, look where the rally stopped that day.
Exactly, 50%.
Right at the 50%.
Mm-hmm.
And then we had an inside day and then boom. And that's what a bull leg does, right? It doesn't give you a big correction or it doesn't give you a lot of chances. A lot of times really strong markets will only give you that inside bar.
Yeah, you have to be on it.
Yep. And so that's cocoa. Now let's look at the other side of the spectrum, the short that we were looking at on coffee. So here's coffee. And we said we got this move, you know, remember like we were showing price and time on gold? Look at the price and time on coffee there on that
Mm,
ABCD. Price and time, and now we started pulling back. The thing we got to be careful of if you do decide to short this. Below 380, obviously you're in a good spot. It looks like we're heading to 335. You want to see these lows get taken out. Because if these lows don't get taken out and we come down here, it could be doing the same thing that Coco was doing, right?
right.
First drive, second drive, and then one more drive higher. So keep a tight leash on it. But the setup right now is it's rolling over. And we'll look at the upper time frames and you can see them, the higher time frames as well. Here's your weekly. I mean, see this held support when we came down, when I first was shorting this thing and riding this thing down, and I said, watch this area for support. We did hold support there, but now we got a lower high. And so that's why if this thing is in fact rolling over, it'll get through 358.
Mm-hmm.
And then again, taking out this area of support, then we're really rolling to the downside. So that's coffee weekly. Let's look at the monthly. There's your monthly. So 343, 350 is key to really opening up the downside here. That gets us down to this support here in the 280 area.
Mm-hmm.
But right now, the full monthly bar is below this 403, right? And that's, basically multiple months that it's tried to attack that area and couldn't clear it.
Right.
So the good news is maybe your coffee's not going to be more expensive, but the bad news is your chocolate's going to be more expensive. And that's the result. That's the sort of the message we're getting from commodity land.
Mm-hmm. Mm-hmm.
Anything you want to add on coffee here, Barry?
No, I think it's timely. I think it's important to watch it. Let's see where this correction goes.
This one by one is also instructive. I just put that one by one on, and this week it's going to be somewhere in this, again, 350 range.
Right.
So let's see if it tests and holds there, then you got to get out of the shorts. If it breaks through, then there could be a lot more moves to the downside.
Yeah.
All right, Barry. So that's it for the commodities. The end of the show topic I wanted to talk with you today is you and I use the FuseLines every day. We use them for both short-term trading and sort of as signals as to what may be happening to the bigger time frame, like an early warning sign for the bigger time frame.
Mm-hmm.
I thought it'd be a good exercise if we could spend 5-10 minutes here and go. I'll give you the screen back and you could kind of walk through, like maybe pick a day last week where we had a FuseLine and just kind of walk through how you use them, how they can be really instructive, even if you're not trading on a 4 minute or a 1 minute or a day trading type level.
Mm-hmm. Yeah, let's take a look at that. So let's take a quick look at the fuse. Earlier I talked about the patterns, so I think it's important to understand the rules, how it works, and what the expectations are. And I mean, here's an easy one. This is, it's a pattern that we know. We call it a spring, but basically ABCD pattern. Except what happens is the ABC usually comes up on the fuse line. So that's an example of one. And another one would be sort of this, what we call a flashover pattern. It's it's a triangle in a sense, except we want to see the flat line along the fuse line, and then it'll break and move. And another one, ricochet is basically the market will, pattern will come down into the fuse and then bounce. So these are, they're simple enough to follow. And let's just take the last. So the last one I posted was, we can go through all of them one day, but let's take Friday. So 59.53 was posted that you can see the time of post, it was 7:10, and 59.53 was the price.
7:10 is 9:10 Eastern, just for
Right.
people's reference.
Mm-hmm. Mm-hmm. And there is the price. So basically it was posted right here, very near the high. So the idea is, you're looking, the ideal situation is you're wanting to see if your systems are going to be going long following the post or short following the post. And the general idea is that you can have a higher confidence in your signal in the direction of the break away from the fuse line. That's
in other words, you don't want to be going long if prices in your system, if price is under the fuse line.
Exactly. Like here, you probably don't want to go long if your system gave a buy, if you know the fuse line's above. That's a good example.
Mm-hmm.
But in this case, once we broke, you can see that how we broke the line after we broke the fuse line. Anytime in here you get a short signal on your system, it's highly probable that it's going to continue in that direction. Mm-hmm. So here, we had two counter trends before the low came in, and they were both, if your system kicked into both of those as sales, they worked out nicely. And that's a morning one. And we didn't really need one for the rest of the day because the lows came in exactly at 59.27 was the support level. So we came off of that. And from there, we just moved higher. And that's how, and we can do the day before too. What was it? 5:15. Take a look at that.
Yeah, let's see what that one was. I think it was 35. Yeah, 59.35.
Yeah, 59.35 was the Globex level. Let's go with morning. Okay, 58.84.
Mm-hmm.
So that's at 7:13 a.m.
Same time, roughly 9:13.
Mm-hmm. What was the price there, Ben?
58.84, I think you said. Seeing if I'm paying attention.
Yeah, quick pop quiz in the middle of everything. So here we posted the level. It's kind of the opposite of what happened, on Friday. So
Yeah.
morning posted that a little bit before, right in here, 1 bar before. And you can see how market went a little bit low, broke up above, came back, tested the line right there. And from there, we made higher lows, and broke out and had a great move up.
Mm-hmm.
So you can see on Friday, we caught the first downdraft, which ended up on our support. So we didn't really need a FuseLine down here, although we had one, and traded higher from there. On Thursday, we were kind of moving down when I posted it. So we came down. We were already coming down very close to the open. Obviously, we did an outside, broke to the upside, came back to retest, three times. So anywhere in here, if you guys had long side signals, if you take them, you're okay. So that's the idea. We want to use that to leverage your system, like to support it, and that's kind of how you use it. We can do a couple more next time, or maybe grab a whole week and do it. And there are some videos posted, or at least not videos, but screenshots where I don't know, a couple of years ago, I was doing like a weekly roundup of all the every day, what happened.
Mm-hmm.
So you guys can look it up by searching for +3 forecast or +3 Fuse, I think, and it'll show up.
And I think that
That's it.
I think
Enough
the
time,
great
right?
thing too, Barry, yeah,
Mhm.
that's great for a quick review. You don't have to like adapt this system and try and trade it. It is a system. The explanation is there in Barry's pinned tweet if you wanted to use it. But you incorporating it as a filter in your own system can
Mhm.
help you as well as he said. Like if price is above the fuse line, you kind of want to downgrade your short signals that you're getting. Or if you get a long signal and price is above the fuse line, it can give you more confidence that, hey, maybe the probabilities are even higher that it's going to work out well for me.
Exactly. That's it. It's a very easy to use support tool, you know.
Yeah, I mean,
So,
and as you said, use it as a bull bear line. Prices above it, it's bullish. Prices below it, it's bearish.
mhm. Yep. Very
And it's
simple. It's
a
almost dumb simple. It's too simple. That's the problem. It's just a line. But the thing is, you don't have to use it. Just follow it for, I don't know, a week or however long it takes for you to kind of see if it lines up with your work and your short-term signals, and you'll see. Not that you need any, you can just trade it by yourself on its own, by itself. But that takes a little practice, right? And you have to be very skillful in your market structure and patterns and how the market moves. Then you can do it. Otherwise, I think linking it up to a short-term system would work just fine.
excellent idea. Well, listen, great show today, Barry. I think we both recognize, and I hope everyone's getting the word that the time window that we're going into is a really important one.
Mm-hmm.
And there's going to be significant changes in how the markets trade and how they trend, and we want to be on top of them. And hopefully today, with the timing explanation and the timing window we gave you, and the levels that we've given you, you have the tools to not only survive but thrive in this. And it is a difficult market, believe me. It's very volatile, but the having the levels and understanding price's relationship to them kind of takes a lot of the stress and a lot of the worry out of your trading, because it becomes mechanical after that.
Mm-hmm.
So have a great week, everybody. Rest up, and we'll talk to you next week.
All right. Good job, Ben. We'll talk to you guys later. Thanks.
Take care. Bye bye.
Bye-bye.